Hopefully y'all are enjoying your night so far. It's everything you hoped and dreamed it would be, besides the parking situation. So we've saved the most interesting topic for last. We have the lucky task of talking to you about money this evening. My name is Josh Warren, and I'm joined by my colleagues.
I'm Beth Higgins.
I'm Hogeun.
Excellent. So tonight we're going to talk about your role in financial due diligence as a board member. And we all know the quote from Jerry Maguire. Is that the right movie? Show me the money. All right, that's what we're going to try to do tonight. So our agenda is we're going to start with why financial literacy matters. So what's the point? Why does it matter if you're not a financial person? If you're the one that doesn't want to talk about money every month with your spouse, you don't like talking about numbers, why it's important for you as a board member. That's my wife. I asked my wife to come, and she said, I have to hear you talk about money enough as it is, so I'm not coming. We're going to talk about financial documents and which ones you might see as a nonprofit and why those are important. Common frauds and abuses, we'll go over those as well. Prevention and best practices, we're going to try to give you 3 big takeaways that you can use as a board. And really what we hope is that if you are that person that's uncomfortable with finances, that you at least leave feeling more comfortable looking at the documents and asking questions. Because you're not alone if you don't understand what all of the numbers mean, all of the lines on those. And we'll have a short exercise as well for you. Does that sound okay? All right. Excellent. So why does it matter? These are some headlines maybe you've seen that are all too familiar in the nonprofit sector, and where it used to be as maybe the third sector, the nonprofit sector felt like it was beyond reproach, that they didn't need to be checked on. These were good people doing good things for their communities. But as we've seen, there still has been fraud, whether it's been intentional malpractice or just misusing the organization's funds. And so the reason this is important, whether it's your organization that ends up in the news or not, it affects all of our funding as nonprofits. So the image gets a little bit stained every time one of these comes in, and another person feels a little more hesitant about whether or not they're going to donate to a nonprofit in their community. And so by being transparent and accountable to the public at large is going to help us all sort of regain that image for our nonprofits. And Athens is a great town for nonprofits, so we really want to keep that transparency up. So board members are fiduciaries for their nonprofits' financial assets, and that's the first reason it's important. So all board members have that duty, those 3 duties of care, loyalty, and obedience, and that applies to the money. So whether or not you're the finance person on your board, you still have a responsibility to make sure that the assets are being spent and monitored carefully. You also need up-to-date information. So we've talked about generative thinking, Robert's rules, and voting. So when you're making those decisions about maybe whether or not to have a benefit night at the local bar, knowing the financial information can help you make the best decisions possible for your organization. So also protecting the organization's tax-exempt status is important. That's sort of the golden ticket for our organizations, right? So we want to keep that in line. And misusing the funds, not reporting them correctly, could put that in jeopardy. We must support internal control policies preventing fraud and abuse. So as a board member, being able to look at your bylaws and codes of conduct and see whether or not there's red flags there and internal policies. And hopefully we can help you with that this evening. And then communicate financial performance. So again, back to that transparency and accountability. A lot of times we're required to be transparent to our donors, but we also want to be transparent to our service recipients and the public at large to keep our image up as well. So now I'll turn it over to Beth, who's going to talk about our financial documents that you run into.
So I don't know if it was planned this way to talk about financial documents after 8 o'clock at night. It can be a little bit tough sometimes, especially those that are not accountants or financial managers. We'll avoid that area with all the energy that they have. It's really important to understand that, since financial oversight is probably the single most important thing that the board is responsible for, it is important to understand the tools of financial analysis and financial reporting. Now, we know that these accountants and the financial managers kind of hoard these reports pretty carefully, right? They try to, sometimes I think accountants try to make it as complicated as possible. The more complicated, the more laws, the more rules about accountancy, well, the more accountants they are, right? So most accountants will tell you that. But it isn't as complicated as we think. But it is important to understand that financial documents and financial statements have certain target audiences. And the first target audience, and the most important one in my view, is the governing body. So the board, and in some capacity, the finance committee and the executive committee of the boards, is the first consumer of these financial documents. Next is the auditors. So the auditors don't do necessarily the analysis of things that are going wrong in your organization or things that are wrong in your organization financially. What they do is they look at your financial documents, they look at the products of your accountants and the products of the financial managers, and they tell you whether it's accurate and whether it's a quality product. The next is the tax authority. So for nonprofits, of course, it's really important to be able to maintain their tax-exempt status. So these documents are the basis for developing the reports that are turned into the government authorities to be able to maintain the tax-exempt status. And finally, the public at large, as Josh just spoke about now, wants to be able to be sure that the money that they're donating to nonprofits is doing what the nonprofits say that they're doing. The public also includes donors, that includes the general public, it includes the people that work for the nonprofits, it also includes volunteers for the nonprofits, and the general public that wants to keep feeling that our nonprofits are doing what they say they're going to do. The goals of these financial forms is, number one, to kind of counter my cartoon there, these financial documents are primarily for accountability. Second, for transparency, so you can see what's going on. And third, comparability. Now, comparability is important because if you have donors that want to compare particularly similar nonprofits and deciding where to donate, if they have financial documents that they can go to say to look at the financial performance of that organization. But it's also important for the organization itself to be able to compare 1 year to the next year or 1 decade to the next decade of their own performance. So financial documents are structured in such a way that they are first accountable, next transparent, and third that they're comparable across. You will find different formats in certain kinds of ways. You might find different formatting. But the rules of accounting pretty much apply the same. So once you become familiar with financial documents in general, you'll be able to apply it to even different formattings that you might see in different organizations. So financial documents, why do they scare us? Are they really actually that complicated? Is there so much information in them that we really avoid it? Or is it the numbers and the ratios? Those of us that get in the cold sweat when they think about calculating ratios, right? I think it's the last, at least for me it is anyway, because most of the time you can really go through. What I wanted to reassure you about is that financial documents are not that complicated. They do require a little bit of homework and a little bit of analysis, like any kind of skill that you have. The more that you're exposed to it, the more that you'll be able to understand them. But you really, really don't have to take an accounting course to understand them. Financial documents capture and measure 4 simple concepts. So in my little Christmas card sign here, first is revenue and expenses. So revenues and expenses, because they're red and green, they pretty much balance off each other. And revenues and expenses are primarily shown in one particular document in an organization. Anybody know what that is?
Net income statement.
Income statement, very good. And then we have the other side, the flip side, the assets and the liabilities. And what is the primary financial document that we see assets and liabilities in?
Balance sheet.
Balance statement, very good. I think you guys are going to help me teach this course for me. Okay, so what I did want to go over was some of the most important financial statements for nonprofit organizations. So we already mentioned just the balance sheet already. Can anybody tell me what a financial position report is? Not to make this any more complicated than it is, guess what? A financial position report is the nonprofit term for a balance sheet. So in the nonprofit financial management world, a financial position report is the balance sheet. Does that make sense? Assets and liabilities, where are we? Extracted from the balance sheet is change in net assets and restricted fund statements. So these are pretty standard ones that pull right from the balance sheet. So they're not necessarily standalone statements. Next, we see revenue and expense statements. What's another name for revenue and expense statement?
Income statement.
Very good. What's another name for statement of activities?
Income statement.
Income statement. Very good. The final one that I wanted to pay special attention to, for those of you that really like to delve into annual statements or auditor's reports, that the notes to financial statements is where you're going to find a lot of great information for an organization. So if you have anomalies in the financial statements, if you have particular trends that are important, or something that the accountant or the financial managers are concerned about, you're going to find them in the notes to financial statements. It's a great resource to find out what's going on financially in the organization. The two below that you see are the two important forms that every board member at some time should be able to review and keep updated on. First is the IRS Form 990. Most of you, I'm sure, are familiar with that form. So that's the annual report on the financial performance of the organization, as well as many other performance indicators in an organization required to be in that form. And the financial audit report. So there's two levels of financial audit reports. One is your internal, which is an organization that's able to do and has the capacity to do internal audit reports. And the other is the external audit report. Here I wanted to show you just two quick extracts from two different financial statements. The top is an example of an income statement. And as you can see, an income statement is a document that actually covers a period of time. So what you'll see here is, and this is pretty standard, you'll see two different years shown here. So this would be the 2018, and normally you'll always compare the year prior. But you'll see many income statements that actually will go back 3, 4, 5 different years. So can anybody tell me, for an income statement that covers a period of time, what is the kind of thing that a board member can look at, or what can you pull from these very quickly and easily without completely understanding income statements? How is that useful to you when you see a document like that?
Whether revenues went up, whether expenditures went up or down.
Very good. So you're looking for trends, and you can look at trends over years to come, and you can look at the relationship between expenses and revenues to see if they correlate. Right? So normally you would think that expenses would correlate, increase in expenses would correlate with an increase in revenue. That doesn't always happen, certainly. So this is a document that allows you to look at trends over time, and very specifically the difference between your expenses and revenues. And anybody that does double accounting, double entry bookkeeping knows that your revenue line has to equal your total expenditures and reserves, right? So anybody that's ever studied the little accounting equation, you know when you look at that they have to match. So you can make a quick look, you know nothing about accounting. If that top line and that bottom line do not match, you know there's a problem with who's ever doing your documents, right? The second one below is an extract from the asset portion of the Abbott Land Trust from 2017. Now a balance sheet is something that is a particular document that is a snapshot in time. So you can take a balance sheet today, you can take one at the end of the month. Normally balance sheets are produced at the end of your financial year. So a balance sheet shows the difference between your assets and your liabilities. Now, what would you use that document for? Even if you didn't know anything about how it was supposed to be organized, where the numbers were supposed to go, how is that a useful document for you to be able to look at that? And this is where the scary financial ratios come in.
Tell you net profit,
It'll tell you
if it's positive or negative.
it's going to tell you a relationship between your assets and your liabilities.
Right.
So a portion of your liabilities is your debt. So you're going to talk about, when you want to talk about your debt to equity ratios, this is where you're going to pull it out of here. So if you want to see how much debt you have related to what the bottom line is for the amount of assets that you have, this is the document that you can go to. That's a little bit tricky, but it's only 2 lines on there that you've got to pull out to come out with that ratio. It'll also tell you your cash position. It's always going to tell you whether the cash flow statements come from the balance sheet, and it's going to tell you how your cash, for example, your ratio for how much cash you have, your daily cash on hand. So that ratio also comes from that sheet. And the great thing is that you can go online to Google or any other search engine you want, and if you want to say, tell me how to get the debt to equity ratio on a balance sheet, it'll tell you in 2 lines how to do it, where to pull it from. So this is not hard stuff. It looks hard, they make it look hard, but it's quite easy. But your debt to equity is very important. Anybody can tell me why your debt to equity is important?
So you have enough money to pay your debt.
Right. And you want to survive, right? So if you become too leveraged, even as a nonprofit, and you don't have enough revenue to come in to pay your debt or the interest on your debt, you're going to be running into trouble. So for those like me who just was really averse to financial statements, I took 10 years of accounting just to get over my cold sweat when I was doing financial statements. These are something that really, when you go full circle, it's really not that hard. It really isn't. This is a quick extract from the Form 990 and the Form 990. This is just one extract. It's kind of like your income tax. So you see the format here. This is an IRS format. This is an IRS form. It's a requirement for nonprofits to turn in every year. This is accessible and accountable in the sense that anyone can find the 990s for any nonprofit that is required to turn it in, that turns it in. You can find it. It's absolute public knowledge. Very important, easy comparison for board members is to compare your basic financial documents to what's reported on the 990. They really should match. So that's also a quick check. Okay, I'm going to be followed by Mr. Hogeun.
This chart shows the many types of clause and the ratio of frauds in the U.S., which is determined by the survey of ACFE. ACFE is the world's largest anti-fraud non-profit organization, so we can trust them. And as you see here, there's so many ways to steal the money from the organization, so we have to pay attention. And I introduced several types of most frequent types of fraud. It starts from corruption, billing, non-cash expense reimbursement, and cash in hand. We'll just skip the corruption, non-cash, and cash in hand because they are easy to figure out. Billing fraud is the second most frequent type of fraud. It includes fraudulent invoicing and overcharging and charging for the same item multiple times. When our group searches the case of billing fraud, you can find many articles like this. This means some medical organizations taking excessive money from the government, insurance companies, and patients. Internal controls are the self-help measures to prevent or minimize the occurrence of frauds. To prevent billing frauds, we always have to pay based on the original invoice, and we need to check the frequency of purchasing to prevent paying multiple times for the same item. And in the same region, we need to record the invoice number and separate the duties of billing and record keeping. Expense reimbursement fraud is the fourth most frequent type of fraud. A typical case example is travel expense reimbursement. It includes submitting of fraudulent receipts and unjustifiable claims and claims for personal expenses. This can be identified by through examining a receipt. On the receipt on the right, looks like unjustifiable claims. Typically, the organization will not reimburse for the alcohol, and even if they do, they will not allow the whole bottle of Canada.
Not allowed.
Additional measures to prevent expense reimbursement fraud is the establishing a travel reimbursement policy regarding alcohol, per diem for hotel, air flights, and meals, and irregular spot audits and prosecuting fraudsters is sometimes needed. Check tampering fraud means intercepting, forging, or altering the check. It is more often in small organizations because the work of accounting is not fully organized in small organizations, and it is more prevalent in the U.S. because checks are more widely used in the U.S. To prevent this, we need to check the bank statement regularly and restrict the access of data entry staff and switching the electronic checks because it has more evidence, and set an email notification or a text alarm so the managers can identify when the transaction exceeds certain limits. Abuses are not explicitly illegal, but they are also abuses are also harmful to the organization. The cases of common abuses are excessive compensation for their CEOs and conflict of interest when they does a contract, and non-competitive bidding and misappropriation without authorization. Now, Josh will introduce the general measures to prevent these kinds of frauds and abuses.
Thank you, Hogeun. So we talked about a lot. We're going to try to boil it down a little bit more into some preventions and best practices, and then we'll do it again for you at the end here. So one thing that's maybe required by law in your organization, or maybe not, but regardless if it is getting an external audit of your financial statements. And we recommend, unless your organization is really small and you don't have the money to do so, always having an external audit so that they can look at your financial statements and make sure those are good. And you can also get a lot of great information from that audit about your organization's financial status. A code of conduct or your bylaws, anything for, whether it's for your staff or employees or for your governance board as well. Reviewing your code of conduct, reviewing your bylaws to see if there are cash procedures in there. Some of those preventions that Hogeun discussed earlier, like having a limit on per diems for travel in your bylaws and code of conduct. Internal audit functions, like we talked about, spot auditing, but also doing your internal audit of your financial statements as well. Proper segregation of duties, so not sort of approving your own travel and approving your own refund for your travel so that you can't go get the Hennessy and the wings while you're out on duty. So any segregation of duties so that there's sort of an arm's length distance for all your transactions so that no one really controls the whole process of money from start to finish. Another policy that should be in place is a whistleblower policy. So we recommend, a lot of you seem to be nodding, you know a lot about financial statements. So we really want you to take this back to your organization and find the folks in there that maybe don't know and train them on this stuff. Give them this PowerPoint and some of the other materials you have in your packet. But having a whistleblower policy actually lets your employees bring up concerns that they have in a safe way where there's no retribution if they bring up anything. So employee training on some of these red flags and detection is important. And then other things like using security cameras or having 2 individuals monitor a cash box at an event are other good internal controls and policies to have, just to make sure that there's always more than one person looking at the money, even if that's a security camera. Now I'm going to turn it back over to Beth to continue on our prevention and best practices.
Well, I want to talk a little bit about paying attention to red flags. So there are things that you can see that you can catch that will start to get you to think maybe something's going on. So one of those things is an employee or executive or board member living beyond their means. So I know most of you are independently wealthy, so it's not a problem. But for those that aren't, if they're actually exceeding what you would think would be their normal income, this is something to think about and something that you can be able to start to investigate, and why a whistleblower policy is kind of important. You might see some stuff going on beyond the authorized financial dealings. So financial difficulties. So we talked about ratios just a little bit ago. If there are things that aren't making sense in the financial performance of the organization, if your analysis and your ratios, and hopefully you've got a good financial manager to be able to say this doesn't make sense, this is not working, to be able to really drive that to ground, to really be able to figure out what's going on there. This is something that if you think something's going on, something really might be going on. And usually close association with the vendor and the customer. So anybody that's receiving supplies and receiving things that are also really good friends with whoever they are receiving the inventory with, this is something that you really have to pay attention to. Sometimes it's not always cash, and sometimes it's not always financial. Sometimes it has to do with the other assets of the organization that people have access to. So the board is responsible for making sure there's policies in place to be able to protect all the assets of the organization, not just the financial ones. Unwillingness to share duties, and this is kind of connected to the next one, kind of never out of their office, never away from their books, kind of always protecting their stuff. No, I can't share this. This is something that's a real red flag. Okay, anybody that's dealing with financial transactions from an organization that can't pass their duties or share their duties, there's something going on other than just protecting their space or their desk.
Although board members cannot examine organ receipt and contract documents, they can detect some significant changes of the organization by examining their financial documents. Our group processed this data from their IRS Form 9990 and Wounded Warrior Project and Disabled American Veterans Charity Services are the organization for serving the wounded veterans. Today, we will see we will catch some weird characteristics or changes of 2 organizations. We will have a couple of minutes to think about some weird things, and you can tell me if you observed something to raise question.
really quick with numbers, being able to see trends and ratios and relationships between these years and what happened.
Yeah, the revenue from the contributions went way down in 2017.
And what happened to the expenses of this income?
And the expenses went up
Particularly
for the grants.
so is this a red flag? Is this something that would really get you interested to see these kind of numbers?
Yeah, I think you pointed out a good point. There is no excellent answer for this, but we can raise this kind of questions why the revenues significantly reduced from 2016 and 2017, and why the salaries and compensation are stable while the revenues significantly reduced, and why the other expenses reduced so much in 2016 and 17. The following news articles can explain this situation. In the early 2016, the financial abuse of Wounded Warrior Project was publicized, so that their reputations and their grant funds and donations significantly impacted, and they were proven to use a lot of portion of money to their salaries and compensation, while they are using smaller portion of money to their project compared to their comparable organizations. As you see in this case, if there is a significant change in the organization, you can identify some changes through their financial sheet. And if the board members of Wounded Warrior Project did their due diligence, this kind of misconduct might not have happened.
Okay, so we've made it to our top 3 action items that we want you to take away. The first one is to review your bylaws and any code of conduct policies that you have for relevant financial policies that we've talked about. And you have some things in your packet that Beth's going to talk about in just a second to help you do that. But some major ones to look at are conflict of interest policies, whistleblower policies, segregation of duties, cash handling procedures, background checks if you have certain positions that are maybe handling money, so if you're hiring staff, making sure they get a background check, and then external audit policies as well. So train all your employees, that's number 2. So I know you all know this already, and you already have your accounting degrees. Go back and take this information to your staff, as many people in your organization that can have it, so that they can monitor when you're not around. Is a good best practice, so that they know their role and their responsibility, whether they're on the board or they're a volunteer, so that they know what to watch out for. And then lastly, the one that we referenced at the very beginning, the most important one, is please ask questions if something doesn't make sense. So it does no good to pretend you understand what's going on in the financial statements if you really don't understand them. I think it happens too often that people feel like, I better not ask any questions, especially about the money, if I don't know what's going on, so they don't feel comfortable doing that as well. So our bonus materials.
Right, so this is an extract. There's quite a few materials that we have listed in a handout behind your last slide, which is in more detail. But this is a little extract to cover the things that you can find in the Council of Nonprofits, which has fantastic tools for financial management for nonprofits. And we talked about today internal controls. So there's one whole section in there that you can link on that board where you get the electronic copy of these for internal controls that are appropriate for small nonprofits. The whistleblower policies, so specific examples of what your whistleblower policies can look like for your organization. Managing restricted funds, we didn't talk about that a lot, but in the balance sheet for nonprofits, you've got a whole section on restricted funds. So if you want to figure out how to do that correctly, this is a great resource. Financial transparency, public disclosure. Most of you probably have been exposed to GuideStar. You know the kind of information that's on there. It's a great resource to be able to go back to compare your 990 or other people's 990 if you'd like to know about it. And any additional information. The last thing that I would like to look at is that financial management self-assessment tool. So if we had another hour tonight, we'd probably go through that financial self-assessment tool. That's something that's really detailed. It's about 8 pages. And for those that like checklists on how to do it, that's it. You know, if you want to really check your organization, where are we, how are we, that document will do it for you. You can do it all, evaluate your organization.
All right, well, thank you so much for your time this evening.